So next up, we have Juan Ketterer. He's the Division Chief Connectivity for Markets and Finance at the Inter-American Development Bank. I'll invite him up.
Hello, good morning to you all. It's a great pleasure for us to be here. I represent the Inter-American Development Bank Group, which is composed of the bank, Inter-American Development Bank, the Invest, which is the private sector arm, and the Multilateral Investment Fund, which is a trust to invest in innovative projects. The thing I want to talk to you today in these 10 minutes is about a journey that we started a couple of years ago when we were looking for new tools to address old problems. These old problems have to do with the problems of development in Latin America. I mean, there are many different problems that are related to development, and there are many different ways in which these problems have been tackled. Nowadays, there is this tendency to try to use new technologies because these technologies are already available, and every time we know more and more about them. The one I'm going to talk is, just for an example, I'm going to give you the way in which we sort of thought of applying this particular blockchain technology to address a major problem in Latin America and the Caribbean. That has to do with access to financing and access to credit. Access to credit is one of the major problems of countries, and that creates a lot of inequality. It creates exclusion, social exclusion, and it also creates lack of productivity, which at the end of the day reverts on underdevelopment. So when we look at the problem of access to credit and we ask why it is that in these countries people and individual firms, small firms particularly, and individuals do not have access to credit, it has to do with a problem of asymmetric information. Lenders do not know what borrowers are about, whether the borrower is able and willing to repay the loan, and also the information that is typically provided, it's always thought as being a little bit questionable, because this information, it's in the advantage of the borrower to give a sort of doctored information about his true type. So, as you can see, this is a problem of trust, basically. And historically, this problem of trust has been solved by using collateral. You know, go to the bank, pledge collateral, and that collateral, it buys you a certain amount of credit. The most obvious case to everybody here, which I guess for what I have been learning this morning, they're not financial experts, is the mortgage lending, right? You put your house as a collateral for a loan. But the house has a particular property, and is that usually, unless it's an RV, the house stays where it is built. But collateral in general can be movable. And the mobility of collateral generates a problem. For what collateral I'm thinking of? I'm thinking of cars, cattle, harvests, that type of thing. So since collateral can be movable, that creates a problem of three different levels when you try to manage this collateral. One is that you don't know where the collateral is, or you may not know where it is. You have to make certain that this collateral is only pledged once, so it's not bigamous collateral. And the third thing is that you have to make sure that this collateral is executed only and only if certain credit event takes place. Just making sure that these three conditions are satisfied generates a huge amount of costs and cumbersomeness in the systems that manage collateral typically. So this cost and this problem at the end of the day ends up being reflected on the lending rates, and even though pledging collateral solves the problem, doesn't really solve the whole part of the problem because of the costs implicit on its monitoring. So then we decided that it might be worth to set up a system based on blockchain to manage collateral. And the intuition behind that was very easy. Blockchain is a machine to build trust. The problem here is trust, so let's try to see how this works. And we started doing that a year ago. The question is that we couldn't really finish the project as we started because we stumbled into a very specific problem. And that problem is that when you look at what happens in a closed system such as blockchain, whatever happens in the system, the changes that take place in the system only matter for what the system is in itself. Anything that happens outside the system and that motivates changes within the system doesn't really have a relationship with the actual changes. And that is a major problem because when you manage collateral, if you put a harvest, for example, on a blockchain system which is closed, anything that happens outside the system is not controlled by the blockchain. For example, the whereabouts of the actual physical assets, blockchain cannot control. The relationship, the alignment of the property between the tokens that reflect the property in blockchain and the actual physical property of the underlying, it's not being reflected. So what happens then is that you have a problem that something that happens outside the system bears upon the whole stability and usefulness of the blockchain system. And this problem is something that has to be thought of at the very beginning. If you do not do that, you are unable, let me have some, if you don't do that, you are unable to fully extract all the advantages of the system. So we had to go back to redefine our whole approach to setting up a collateral based on blockchain, because blockchain on itself didn't solve the problem. Not only that, but it also led us to a false sense of security, because we thought that by having the tokens moving in blockchain, that those tokens would yield to the overall system a sense of trust which we couldn't accomplish. Luckily, all this happened in the design stages in some proof of concept situation, so no harm was really done, but we learned a lot about this initial process. So now we are in a situation in which the development of the collateral management system is being thought not only as a pure blockchain play, but blockchain sits on the middle of it, but we also have to take care of all those processes which move the pieces which fall outside the scope of the blockchain. So this is something that we started, as I said, 2 years ago. We hope that we're going to be finishing by the end of this year. And at the end of the rainbow, there is this sort of shiny pot that hopefully is full of hope for having solutions that will help us to deliver better development to our countries in the region of Latin America and the Caribbean, and probably to the rest of the world. Thank you very much.